loan, 'cause you wanna buy a home. If your credit's no good, you'll pay more than you should. And given what's at stake, don't make these 5 credit mistakes. Hello, this is J. Mike Perkins, and welcome to Music and Mortgage. And on this episode, 5 credit mistakes. In addition to being a mortgage loan officer, singer, songwriter, I have a long career as a credit counselor, and you can make more than 5 credit mistakes. But what I've done here is pick out 5 of the top credit mistakes that I would see. Before any of this makes any sense, here are 7 things you need to understand. There are 3 different credit bureaus out there: Equifax, Experian, and TransUnion. Each of these are 3 separate companies. They're competitors to each other. When the mortgage company goes in to pull your credit report, they're going to pull a report from all 3 of these bureaus. And assuming that each one gives you a credit score, the score that the lender will use is the one that is numerically in the middle, regardless of what bureau it comes from. Other creditors, like credit card companies, typically only pull a 1 bureau credit report, but it could be from any one of the 3 bureaus. One thing that's frustrating about credit scoring is that there are multiple credit scoring formulas out there which will produce slightly different results. There are 2 different companies that create them, the FICO company and the Vantage company, and each of them have multiple versions of their credit scoring formula. One thing I can almost guarantee you is the credit score that the mortgage company comes up with will probably be a little different from the one that you see yourself when you pull a credit report off the internet, because the mortgage company will use a different credit scoring formula. One thing to remember is only the credit information that actually appears on your credit report is used to generate your credit score. The credit scoring formula does not take into account your employment, your income, or your assets. Some creditors don't report to all 3 of the bureaus. That's why you may see a different credit score from each one. Mistake number 1 is not having enough credit to generate good credit scores. Paying cash is great until you need a credit score, to buy a house or a car. I would always recommend that you have between 2 and 3 sources of active open credit. And one of these sources needs to be a credit card that reports as revolving credit. Mistake number 2 is excessive fear of credit inquiries. If you're going to go out and establish credit, you're going to get some inquiries. But one thing you need to understand is this: not every inquiry will lower everyone's credit score all the time. That only applies if the system believes you have had, quote unquote, too many recent inquiries. But trying to figure out whether you've had too many recent inquiries or not can get complicated because, for example, some inquiry types, like mortgage inquiries and auto finance inquiries, are within a certain period, are grouped together and counted as one inquiry in the formula to try to figure out whether you've had too many recent inquiries. But, worst case scenario, even if you have had, quote unquote, too many recent inquiries, each additional one will only lower your credit score around 3 to 5 points, so it's not the big score killer that some people believe. Also, remember that many creditors only check 1 bureau, so you just get an inquiry on one of them, and it doesn't affect the other 2. And finally, if your issue is lack of credit, I can promise you that you're going to get a bigger boost in your score from establishing new positive credit and paying it on time than you would ever lose from a few inquiries. Mistake number 3 is making late payments. Your recent payment history is the most important factor in calculating your credit score. If you open up new accounts to try to establish new credit and then you pay those late, that's about the worst thing you can do. If there's any question that you might not make the monthly payment on time, I strongly recommend that you set up an automated payment from your bank account each month for at least the minimum amount due. If you want to pay more, you can always make an additional payment. Mistake number 4 is not having at least one open credit card that reports as revolving credit. Credit comes in 2 main types: installment and revolving. Installment is like a car loan where you borrow all the money up front and you make fixed monthly payments. If you send in extra money, they don't lower your payment, you just pay the account off sooner. With revolving, the payment goes up and down as the balance goes up and down. If you don't have open or very recent revolving credit history, there's a good chance that you're taking a hit in your credit score because of it and you need to open up a credit card. It doesn't matter whether the card is unsecured and doesn't require a deposit or is a secured credit card and does require a deposit, as long as it reports as revolving credit. What you want to avoid is a prepaid debit card, even if it claims to be some kind of credit card, because it will not report as revolving credit. It won't hurt you, but it's not going to help you like you would be helped if you got a real credit card that reports as revolving credit. Now, how can you tell the difference? Well, a real credit card is going to check your credit. The prepaid debit card is not. With a real credit card, they're going to hang on to your security deposit. They're not going to make the monthly payment out of it. But with a prepaid debit card, they do. Mistake number 5 is maxing out your revolving credit card. If you charge up more than about 30% of your credit limit, you may lose some points for it, but this goes on a sliding scale. It's not too bad in this 30 to 50 range, but you charge up about 75% of your limit, yeah, you could be losing some points in your credit score. If that applies to you and you need to raise your score, the fastest way to do it would be to pay these accounts down to about 30% of the credit limit. Thank you very much for watching. If you're on YouTube, please help my channel by hitting like and subscribe. And now, more music. If you need a mortgage in Texas, then you should give me a try. All you've got to do is scan the QR code and apply.